Hi, welcome to this channel. I want you to be rich. Today we're going to talk about the 3 financial lessons that you should achieve before the age of 30. But this is part 1 and I'm going to talk about that. Yes, so one of the financial goals that you should achieve before the age of 30, 40, 50 or any age that you find appropriate these days is to actually pay off your debt. And in this video, I'm going to talk about the 2 methods that you can use to pay off your debt and what are the findings that some of the like Harvard Business Review have found out. I'm also going to talk about why is it important to talk about debt and money. Let me just start by sharing a story with you. It's a family friend. I won't name who, but let's call this person Anne. Anne is a family friend, graduated in her 20s, very quickly took a short holiday to celebrate the fact that she got a new job, very nice salary, college degree educated. So education has nothing to do with how you spend. She doesn't have college loans or anything. Very quickly, she got a few credit cards approved. Like everyone in America, when you have a paycheck, it's very easy to get a credit card. And so she started eating out a little bit, just taking a few Uber trips home, buying her morning coffee, as well as shopping on Amazon, doing a few Uber Eats now and then. And before she knew it, her credit card debt was climbing. And one card went like $6,000 and she didn't think much about it, paid the minimum, and it started escalating. She bought a few very nice bags just to, show up at work with nicer bags, like every young person in our 20s would do. And to pay off the $6,000, she took on another credit card to pay this credit card. And over time, it ballooned to tens of over thousands. How did something so small as a $6 coffee balloon over time? I don't know, maybe it's the credit card interest rates or fees. And a lot of things add up. And it's very important. Then I realized that as we become adults, got our jobs, apply for credit card, we never had personal finance education. I never had any in accounting degree, law degree, or economics degree. And it's incredible that we are becoming adults and entering the world, having credit card, having to make payments for our cars, housing loans, rent, and we were never taught about personal finance. Which is why this video, I hope that it depends on what stage you are, it will help you in some ways or another. Whether you're trying to pay off your student loan debt, whether you're trying to get into debt like you are a student, or you're trying to get out of debt, I hope this video will bring you some very good ideas that you can customize it to fit your lifestyle. So let me just start by saying the findings of one of the studies found that the average saving of someone in our 20s is $16,000 and someone in our 30s, the average American, say $45,000. And according to Fidelity Investment, and I'll include the link below if you'd like to know more, can be on my website or some of these surveys that I found, the results are in the links. Analysis by Fidelity Investment on age-based savings, so how much savings you should have according to age-based savings milestone. By the age of 30, Fidelity Investment suggests that you have 1 year of your salary saved. But I like to share with you the truth. The truth is that your financial well-being really depends on where you started off. Did you have your parents pay off your loan or scholarship? Are you struggling to pay rent and buy groceries at the minimum, where you can't even talk about paying your credit card debt because you're using your credit card to buy food? Or are you at a comfortable space where you're earning $60,000 to $100,000 a year and you're thinking of your 401k, Roth IRA, and putting aside more money to pay off your credit card debt or reducing your... So different people are at different stage of our money cycle. Whatever it is, it's important to talk about money, normalize money, and understand the power of debt, good debt and bad debt. So let me just begin by saying what's a good debt. A good debt is when you put money to good use in terms of an asset, be it investing in yourself, which is the most important, yourself, buying books to read. If you can't read, listening to Audible, I have Audible link below. It really helps me to read a lot more than having a book. or investing in an asset that produces income, let's say a rental property, or investing in stocks. I have videos on stocks investing, or just basically investing in a relationship, taking your mom out for dinner. And bad debt includes very high credit card interest that you don't have time or money to manage it, so you let it run, you're paying the minimum or you miss payment, and that absolutely affects your FICO score. And for those people who follow Dave Ramsey like me, and Dave Ramsey is someone who's very averse to credit card, and I can totally understand why. I love his idea of not having credit card at all, only having debit card. But let's face reality here. All of us might need to rent a property, buy a car on a loan, we can't pay cash. And when you rent a property, they're looking at your FICO score. When you want to buy a car on a loan, they're looking at your FICO score. Let's say if you reach your 30s or even in your 20s, if you work very hard or got some inheritance money, or you had a side hustle and you made enough money to buy a little house and you want to get a mortgage, what are they looking for? Your FICO score. And you don't get a FICO score if you're using a debit card, so therefore you need a credit card. But over time, a lot of us, when we have a credit card, we spend on the little things and they add it up and we have a lot of debt. So how to pay off your debt should be your financial goal by the age of 30, because if you have a lot of bad debt, credit card that has 16, 24%, 30% interest, it's going to totally eat up your savings. It's not going to help you with your sleep, and it's just going to be very bad for your FICO score as well. So get a credit card, but make sure you have the money to pay it off. Two methods to pay off your credit card debt. The first method is called the debt snowball method, also recommended by a lot of financial gurus such as Dave Ramsey, is to start with the smallest balance. And why is that so? Because according to a study by Northwestern Keller School of Management in 2012, a consumer who tackles small balances first are likelier to eliminate their overall debt. So it gives you a sense of motivation and progress when you're paying off your smallest debt. So list out all your debt and expenses, find out what is the credit card debt that's the smallest, pay it off. And in 2016, Harvard Business Review found that it is the sense of progress and motivation that helps you pay off your debt, not how much you pay or other things. It is the motivation and quick wins, the fact that you managed to achieve something earlier on make you want to do more of it. So paying off your smallest credit card debt helps you consolidate your debt as well. So if you have 6 credit card or 5 credit card, you want to pay off the one that is smaller so that you only have 5, because the due dates, the fees, the interest rate, they all varies, and it makes it very confusing. And that comes to the point where what is the average debt of an American? So according to, and I'm going to list it down below in a CNBC linked, the average debt of an American is $90,460. And for Gen Z, 18 to 23 years old, $9,593 is the average debt. And for millennial, 24 to 39 years old is below. And for Gen X, 40 to 55 year old, so you want to just check out the link below to see what is the average debt and how you compare to it. And I'm going to go on to the method number 2 on debt stacking method. Debt stacking method, which is I think a much more preferred method, is to pay the costlier loan first. So the first step I would suggest, and I list it down in my website on a blog, all the details of this whole debt payment method, is to actually list out all your expenses and income to find out, first of all, are you in a positive cash flow or negative? If you're in negative cash flow, you might be struggling to pay your groceries or gas. No matter how you try, you're never going to have enough extra to pay off your current debt because you're spending more than what is coming in. It's like a pail of water. So if you're adding water but the water is coming out more, you're never going to fill up the pail. So in that case, I would advise you to actually look at your income and how you can reduce your expenses and increase your income, such as a side hustle. But just assuming that you have extra cash left at the end of the day and you could reduce your expenses, I don't know, cutting Netflix or just not drinking that $6 coffee. There are many ways to save. It's listed in my other video on how you can save money easily without going through the pain. Or reading the book called Atomic Habit, having good habits will actually help you save money as well. But to list down all your income and expenses is very easy. Use a free app. I'm going to list it in my description below. I list it down, and if you measure it, you're going to get through it. List down all your debts in ascending order, so all the monies that you own, whether it's credit card, car loan, but I will definitely list down my credit card first because they usually have very, very horrendous interest rates. And like Anne in my story, that family friend suddenly found herself in tens of thousands of dollars of credit card debt because it just ballooned. And so list it down from the most expensive interest rate to the least expensive, and then commit to pay the minimum payment and then pay off the one that is most expensive. What I personally did was I consolidated all my credit card bills into one and refinance it and restructure it. So if you're not sure about this, there are many websites that helps you understand financial interest and all that. Talk to your bank, call them up and ask them what interest is it. Is it possible to do a refinance or restructuring of your credit card, or to just use another credit card with a lower interest rate to pay off this credit card? But I hope that you're not in that situation. So then after that, commit to pay the minimum amount, because once you miss the minimum amount even by once, your FICO score is going to be really messed up, and that means the next time when you borrow money, it's going to be much higher. And there are also very easy formulas to pay off your debt faster if you have extra cash at the end of the month, is to shorten the length that you're paying for your loan. So instead of 12 months, you can pay off in 8 months or 6 months if you can afford to pay it. So the first thing is to calculate how much money you have and how much money is coming in or going out. The other one is to pay a little bit more. So if you're paying $600 a month for your student loan, try to pay $800 a month if you can afford it. And to consolidate all your debt is number 3. Put everything together into one loan if it's a cheaper interest rate, and it's so much easier to manage. Things that are easier to manage will get paid faster. List down the payment due dates, amount, and automate it from your paycheck. Have 2 accounts, one where you take out money and just automate it. Have a payment scheduling so that it's automated from the bank, and you can use an app. It's very easy, so that you are not physically going in to make the payment, and sometimes you miss the payment. So, and number 5 is to understand the total cost of borrowing. Like over here, what are the hidden fees? What are the early payment costs? What is the interest rate that you have to incur when you are on that loan? Is very important to know what you're paying. If you're not sure, call up your bank, call up your financial advisor, find out how much you're paying, list it out. If you like this video, please click subscribe. It really helps me with the algorithm. I'm going to list down a few books that really helps me improve my financial health and also my habits that really helps me save money in the links below. If you have finished paying off your debt and you have a very nice way of doing it, share in the comments below. I love to hear from you. Thank you. This is I Want You to Be Rich. I hope you find this video useful.